Another video, and today I want to give you guys a regression analysis on what you can potentially expect from the federal chair Powell, who's going to testify tonight, and how it's going to impact the market from a technical perspective. So we are going to look at the dollar index as a standalone, the NASDAQ US30, as well as gold and the SNP500, because of the correlation between gold and also how you can hedge against inflation with gold as well. Also, then we're basically going to compile the data, and I'll tell you exactly what you can expect from the market going forward. Now, the first question I got was someone asked me, what does Powell normally testify about? Well, the Federal Reserve Act requires the Federal Reserve Board to submit written report to Congress containing discussions of the conduct of monetary policy and economic developments and prospects for the future. So think of it in this way. So it's basically when you are like a manager at the company that you work for, and your boss says every month you need to write a report in terms of where things have gone wrong and what your plans are to correct it in the future. So the first thing that they do basically is that Powell first, so we can see over here, but Powell testifies on Tuesday, and then he comes out on Thursday there as well. But he's going to testify tonight before the Senate Banking Committee, and then on Thursday he then testifies in front of the House Financial Services thereafter as well. Now, before we get started, there's just something I want to speak about very quickly, which is slightly off topic before we get to today's video. And that's something that's got to do with the way people perceive trading and how they think about it. Now, it's important that you guys understand that when you do trade in the market, or if you are a retail trader that speculates in the market, let's assume that you buy the dollar index at that price and you expect the market to continue higher from there. You cannot sit there and think that the market is going to stop right there and move up. You can't always expect the market to just move up from where you've placed your position. And the reason for that is that is the wrong perception to have. Do you really think that if you buy the DXY with a 0.01, everyone on the exchange floor on Wall Street goes, guys, guess what? Someone from South Africa has just bought DXY with a 0.01. Investors, we know you guys want to sell the dollar index, but we've got a very important person with a 0.01. Please tell the central bank we've got someone with a 0.01 that wants to buy the dollar index. So that means, can we forget about the sells on the dollar index and let's move the market up? It doesn't work like that. The market doesn't work like that. It's very important that you have the correct state of mind when you do decide whether you're going to sell or buy the market. So that's just something off topic that I wanted to discuss with you guys, because I think a lot of retail traders in particular, they go into the market thinking that when they buy a certain currency pair, the market needs to drop everything that it's doing and just go into the direction that they do. Now, you don't have the liquidity to move the market, so leave it to the big boys to actually do that. So let's jump into today's video. Okay, so we're going to speak about Powell's testify, what you can expect from it, and what you could potentially, which way we can potentially see the market move. Now, Powell might be expected to come out and testify tonight. He has been supported very much over his efforts, especially last year, to cool the economy, which have seen the stock market into a nosedive since last month. Sorry, for the whole part of this year. So we know that last week, in November or December, Powell was, when Powell testified, he said that he's going to make it his job to bring down inflation to below 2%. And for the whole year, this year, we've only seen inflation gone up, and as a result of that, the stock market had to take a move to the downside. Now, we know that is going to, well, that was the case, and that led to a sharp tightening of a broader financial conditions, okay? And we saw that basically across the board. The dollar index increased in value, and the stock market continue to the downside. Now, this week's hearing could offer the glimpse of whether that support is beginning to crack. Now, for those of you that don't know, Powell gets a lot of supports from the Democrats, the Republicans in Congress, and from those in the West Wing. But today could be a decisive point of whether they are going to continue to provide that support in order for Powell, who likes to pump money in the market. Now, in the monetary policy report that was released last week, the central bank declared that its commitment to restoring price stability is unconditional. Now, if you don't know, this is what I'm referring to. So this is just a report from CNBC where it says Fed promises unconditional to approach to taking down inflation there as well. Now, this is a new word for the people that's watching it out there that could open Powell up to some pointed questions as well. So if and only if, remember, Powell first comes out and he testifies with all of the stuff that he's going to say. Right after that, there's going to be a Q&A based off what he said there as well. Now, by its very nature, a dual mandate means that the FOMC cannot have a truly unconditional commitment to either of its two objectives as well. Now, Friday's monetary policy report also argues that the price stability is necessary for sustaining a strong labor market, which is true enough, we know, in the long term. However, the Federal Reserve always faces difficult questions about timing and about how of the economy damage that will have to that it will have to accept in the long term as well. Now, we've heard someone once ask Powell, why did it take so long for you guys to, not for you guys, but for the Federal Reserve to tackle inflation? And basically, he couldn't really answer the question. Now, let's assume, okay, and this is just an assumption. Now, what happens if Powell comes out tonight and he starts, the information is perceived a lot worse than what everyone expected, and how far he and his people will bring inflation back to the 2% objective if the labor market starts to significantly deteriorate. Now, with that being said, I'm going to pause it right there basically. Now, in order for you to understand or to grasp what I just said now, sorry about the ads, but for you to understand what I just said now, you need to understand the following. Inflation is sky high. We know that inflation is high, right? In order to tackle inflation, what the Federal Reserve need to do is they have to hike interest rates. Now, we know that they have been hiking interest rates quite aggressively over the period of time. They've been through a 0.75 basis point, and the Federal Reserve, like we know on Friday, said that they will take an unconditional approach to take down inflation, and no matter what it takes, that it could be the case. Now, when they go into next week and they further continue to hike the interest rate, what that basically means is we could potentially, not potentially, the stock market tends to hurt off there. Now, because of the companies listed on the stock market and because of the valuation in the stock market that keeps dropping, we basically know people's going to lose their jobs, right? That means in order to bring inflation down, it's going to come with a price. The price is people are going to lose their jobs. And one thing is going to lead to the other. So if Powell comes out tonight and he's going to be as honest as I would have expected him to be, saying that, guys, we are going to continue to hike interest rates as aggressive as we should. People's going to lose their jobs. The stock market needs to go down. That's the only way that we can bring inflation down. Then there is a high possibility that the dollar index will continue this move to the upside. Now, the dollar index is still a far way from home, if you ask me, there as well. So we're currently trading at this level. And if you remember, I've spoken about this many times before. Now, the next level for the dollar index is going to be sitting at that all-time high there as well. Now, that is basically what we are looking out for Powell tonight. But this is what I can tell you. Powell is not going to come out tonight with, who's going to be the kind of guy that is going to be the fun kind of guy, or the guy that's going to that's going to make it easy for investors who has got a large portfolio in the stock market. However, it is important to keep in mind that the Federal Reserve, the Federal Reserve is going to hike interest rates very aggressively going forward, which is way above their initial target, I think, of 3.6% for this year. And as a result of that, the dollar index is going to continue this move to the upside. The stock market is going to continue that move to the downside. And whenever they find price stability, then we can buy the dip. But for now, there is no dip to buy. So let's look at what we can expect from the market as soon as after Jerome Powell had testified. And regardless of what he's going to say, it's going to strengthen the dollar because the dollar runs at the back end of a hike in interest rate. And because inflation numbers are so high, we can expect the Federal Reserve to continuously hike the interest rates until we see a dip in the CPI numbers there as well. And if you're wondering what happened to Bitcoin, Bitcoin decreases when the dollar increases. So that's basically inflation. The Bitcoin got banned in Russia and all of that stuff, but I want you to discuss the Bitcoin there as well. So we're going to start with the dollar index on the monthly time frame. What do you see? Now we can see that the dollar index on the monthly time frame had just found a strong level of resistance over here. This level over here acted as a strong level of support. Support got broken, and the market is testing it for the first time as resistance there as well. Definitely giving us an indication that we can expect a pullback, which is exactly what the market is currently giving us before that continuation to the upside. Now from a weekly perspective, it's quite clear that we can see the market has just printed an equal low. We also have this massive impulse, but we have this impulse here. Then if you take your Fibonacci from the low to the high of the impulse over here, you can see we're at a 50% pullback. Then you can also see that the market had never hit the minus 272, which is the first Fibonacci level that you expect the market to hit before that pullback. Now, on the daily time frame, what do we see? Now, on the daily time frame, we can see that the market had just found this level of, if we go further back, we can see the market is currently trading at resistance. This level over here acted as a strong level of resistance. The market broke above that, came to test it as support. Support did not hold. The market broke below support, tested it as resistance. So we can see how the market is currently testing and rejecting that level as well. But the market had also found support. Now, this is something that you normally see happen before high impact news comes available. That the market will start trending sideways. Now, a lot of traders would come in here and say, bullish flag or bearish flag. That's not what it is. That's resistance, that's support. It's got nothing to do with anything that you want to make up and think you look good on that there as well. Now, it's very important to be reactive and not predictive. Now, because we are trading as close to support as resistance as we can, there's two ways to approach the situation. Now, we can wait for this clear break above this level and then on the retest. Now, why I do a breakdown on the dollar index, it means that if the dollar index increases in value, you can basically trade anything that trades against the dollar, because all currencies trading on the spot trades against the US dollar. This is the one way that we are going to look at it, depending on what Powell says. Alternatively, what we can also wait for is we can wait for the market to give us a liquidity grab or just another move to the downside, and then from there we can definitely expect that continuation to the upside. In doing so, the market would then print this W formation, which is considered a bullish pattern from a technical perspective. Next up, what we are going to look at is we are going to look at the NASDAQ 100. Now, the NASDAQ 100 had not been bad, not filled in that gap, but the market had, however, given us this inverted head and shoulders, which is considered a bullish pattern from a technical perspective. Now, I've done this analysis on, when was it, on Sunday, and I'm going to leave a link in the description below for that, or I'll get the pop-up to come up here somewhere where you can go and watch that breakdown that I did. Now, it's important that we do have this inverted head and shoulders pattern. This is considered a very bullish pattern from a technical perspective. Now, there's two ways to approach the situation, and the only way I see this play out, although this is a bullish pattern, once Powell comes out tonight, we can definitely expect this market to continue this move to the downside. Alternatively, the market could also, this market could also just go fill in that gap and then start that meltdown to the downside. Now, the easiest way to approach the situation, right, is to be reactive and not predictive. But if we do get a daily close below this level when Powell speaks tonight, then we can expect this move to the downside. If and only if we get this daily to close above this level, then we can expect the market to go and fill in that gap, and then before it starts that move to the downside. In doing so, if you take your Fibonacci from the low to the high, you'll also have the confluence of the 0.382, which is a down, which is an indication that the downward momentum on the NASDAQ100 will be quite heavy. Next up, we do have the US30. So we have the same kind of price action, but the way my eyes are looking at this, I can see over here that we had the structure that the market had printed over here. Now, we also have this structure that the market had printed over here. Now, Dow Jones is a bit of a different situation. So we can definitely expect the Dow Jones to continue lower first, potentially go up, but I would probably see the Dow Jones slip below this level, come back for the retest, and then continue that move to the downside. In order for the Dow Jones to survive this bearish territory, the Dow Jones need to close. This candle has to close back above this level over here. And trust me, my friends, from where I'm sitting, I don't see that happening anytime soon. Next up, we do have gold. Now, gold is the best precious metal that you can buy when during times of inflation. Gold that also provides us a 61.8 Fibonacci retracement. If you take your Fibonacci from the low to the high, you can see the market is testing, rejecting the 61.8 ahead of Powell's inflation, as ahead of Powell's testimony as well. Gold is something that you'd probably want to buy at this point, even if you've got a large portfolio, or if you know how to manage your risk. Gold is something that you definitely want to buy as inflation starts to take off for the US, as this will definitely help you long term. Gold, I potentially see probably going back there again, but it's going to take a lot of time for you to, if you've got the patience to hold a long term swing on gold, then you're more than happy to do that on gold there as well. Now, I know there's a negative correlation between the dollar index and the precious metals, but during times of inflation, when inflation's high in the US, you can expect gold to increase, because gold is considered a safe haven, and investors tend to just move their money to gold during times of uncertainty. The SNP500 printed the same price action as the Dow Jones. The market had slipped and broke below this level. I do expect this market to continue lower and then go and hit that level, and then potentially moving lower. Now, my friends, that's all from my side. Also, if you guys, just a quick question from my side, I would like to know for how long you guys have been trading, and also what is your biggest obstacle in trading as well. If you've come this far, you can just answer that question for me in the comments. I want to say thank you for your time. Thank you for taking out the time for watching the video. And as always, cheers for years.